One thing that I have said on this channel is that this is the year everything changes. Welcome to the channel, everyone. My name is Nick. For those that are new to the channel, hopefully by the end of this video, you do become a subscriber. If we take a quick look at the recent announcement from Goldman Sachs, they are launching they're launching three tokenization projects by the end of this year. And what's interesting about this is if we go back to my post from January 8th, when we heard all the discussions around the ETFs, I said I strongly believe that we are starting to move away from the speculative market into a much more mature one. Let's talk about it real quick. Recently, we saw Jay Clayton discussing Bitcoin spot ETFs. His overall view was that during his prior tenure at the SEC, there was far too much wash trading and illicit use of Bitcoin to have an ETF. Now, apparently, Bitcoin is safe even after Elizabeth Warren and Jamie Dimon were saying the opposite. Confusing. The significance of the ETFs is not the money that will come from it, but the reputation. We are now seeing for the first time in history of crypto traditional finance giants coddling Bitcoin. This definitely goes against the original idea of Bitcoin and crypto, but it was inevitable either way. Leaders from this space, especially from Ripple, predicted this is the year institutions really start taking crypto serious. Regulations and standardization is what I really am focused on at the moment. Singapore, UAE, the UK, Hong Kong, Japan, Europe, hell, even the US is now starting to move in on some substantial bills for crypto or progressing heavily. It would be a bad decision to avoid the key factors and rather be distracted by just what the ETFs do short term. Remember what the ETFs really are. A welcome mat for the Web2 retail herd. We witnessed Larry Fink and various other TradFi leaders practically spotlight tokenization as the biggest thing in history of tech on mainstream media. I've reported on giants already tapped in on various fronts regarding this as well, like Hedera with Aberdeen or even Stellar with Franklin Templeton. And these are just two of many. We are starting to see the flood of institutional enterprise players jumping into the space. Reports are coming out from the names like Citi mentioning the keys to mass adoption. They are all aware of what is coming to the world of crypto over the course of the next few years. This will be bigger than the internet and truly will transcend every single innovation in history. Notice how I didn't even mention the convergence of blockchain and AI, which will accelerate this even further. At the end of the day, the ETFs are the beginning of what's to come for crypto. Institutions are embracing this market for what it really will become, a breeding ground of incredible innovation and wealth creation. The key for the retail sector is to be positioned before it really is too late to be early. I'm not focused on the prices at this point, and I surely don't care what happens next week or next month. I am looking much further ahead. This is the biggest opportunity that we will ever have for the next 10, 20, hell, who even knows how many years. Don't waste it. Now, building on this, there was a recent video that got posted by Subjective Views, and we have Enter Goldman Sachs. This is the global head of digital assets at Goldman Sachs. Noted the surprising scale of activity in the tokenized asset market, stating that it's already operating at tens of billions of dollars. He emphasized the current practical uses of the technology for intraday liquidity, such as repo and FX, and that if the industry focuses on scaling these solutions, it will be valuable on both micro and macro levels. Check this out.
One thing we've not really touched on, and actually if you look at the title of the actual panel, transforming institutional capital flows, and actually the use of the technology for moving collateral across the system. We had a conference last week, and I think a lot of people who came away from that were actually surprised by the sheer scale of activity already in that market. Now, the scale may be intra-affiliate, there may be some kind of interbank activity, but what was kind of striking was you're talking not hundreds of millions, you're talking tens and tens of billions. And to me, actually, that's the most exciting thing about the technology today. It's not something that's a pipe dream. Actually, if you use it for kind of intraday liquidity purposes, be that repo, be that FX, thinking about repo on a term basis, and even kind of the collateralization probably a little bit further down the line for derivatives, this can have an absolutely profound impact. You can de-risk the market and you can reduce kind of counterparty risk and just make the whole thing just much more seamless. And that is something that actually can happen today. The trick is scaling it, which I think the market, is very focused on. And there's a number of, people who are working and involved in that space. And I see Ami over there. Give a shout out to him. And, I think that's really important because, we've done this on a micro level and shown to the firm we can actually create value. but others across the market have probably done it much bigger, and there's real value there today.
Now, building on top of this, if we go over here, we have the announcement of Goldman Sachs, we know, with the 3 tokenization projects, and then also we have some quotes. And here we have declined to provide specifics on the 3 tokenization projects set to launch this year, but said that one is focused on the fund complex in the US and another on debt issuance in Europe. With the US presidential election and a potential change in the government's regulatory approach towards crypto just a few months away, he said that the bank's opportunities in the space could expand, including being able to hold spot crypto assets. There could be other things that we as a firm would naturally be interested, subject to approval to do, like execution and maybe sub-custody. So very, very interesting. We are now starting to see the big flood. We're now starting to see the big players jumping in on this space. This also takes me back to BlackRock, right? Remember what Larry Fink from BlackRock said. He said that tokenization will be 100 times bigger than Bitcoin, and tokens are the next generation of markets. And if we go over here to what he said on this forum back in, I believe that this was the beginning of the year. I know that this got posted in March, but listen closely to what he says here.
I actually believe this technology is going to be very important. Look at it. We have been part of the huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we can have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
So there you guys have it. And again, remember what this really is going to do for finance as a whole. Like, this is changing everything around finance, but it's going to be 100 times bigger than Bitcoin. Now, as we do really kind of look at that opportunity, let's actually look at what's going on. Here's the DTCC, $3 quadrillion per year processed through securities. Okay, what did we just hear from Larry Fink? He said that the tokenization of every financial asset, yes, that does mean securities. Everything is going to be tokenized. And just imagine what happens to some of these very efficient networks that are ultimately at the forefront of the tokenization revolution. We know Ripple is positioning the XRP ledger at the forefront of this with institutional DeFi initiatives. I'm very excited about this. Now, also remember, going back to August 4th of 2023, almost a whole year ago, Ripple joined the ISDA. The focus was derivatives. Officers from BlackRock, Societe Generale, directors of JP Morgan, Citi, Goldman Sachs, BNY Mellon, London Stock Exchange, even the CME Group. CME Group is crucial to focus on because we also know that Ripple just recently joined the CME Group, or XRP got listed on the CME Group. And also Bank of America, Intercontinental Exchange. 1,000 plus institutions are members, 79 countries, the list goes on. Here we have the full-on new announcement from the CME Group. Starting July 29th, benefit from transparent pricing on 2 new cryptocurrencies as CME CF Internet Computer Dollar and XRP Dollar reference rates and real-time indices are added to our expanding suite of benchmarks. Again, just confirming the fact that XRP has so many connections to a lot of these derivatives marketplaces and derivatives names like ISDA, which, by the way, if we actually look at this, since 1985, the International Swaps and Derivatives Association has worked to make the global derivatives markets safer and more efficient. 1,000 member institutions from 77 countries. This is an absolute giant. And also building on top of this, remember that the policy director APAC at Ripple is also working at the ISDA, or at least worked at the ISDA for 5 years. This is crazy. And remember that the derivatives market is valued at well over $1.2 quadrillion. I think that might even be a little bit more now. And also over here, we have why XRP being added to the CME Group's derivatives real-time reference rates is very important. That's the big question. Big shout out to Smoke Dog for this. Well, the market is the end game for value. Ripple and XRP aim to make the entire value chain more efficient with DLT, and that includes derivatives. In this video by ISDA, Ripple partner, they describe how the derivatives market is on the cusp of a technological revolution while discussing their new CDM model built for blockchain. Check it out.
The derivatives market. The derivatives market is safer and more transparent than ever before. But the infrastructure that supports it is complex, disjointed, and costly to maintain. Managing basic processes throughout the life of a trade is manually intensive. Each firm has developed its own way of describing common events, like trade termination, compression, or the exercise of an option. This increases the potential for inconsistencies between firms. Constantly correcting this is a big drain on resources and is not sustainable. Fortunately, new technologies such as distributed ledger and smart contracts offer the potential for greater automation and efficiency, reducing complexity and costs. But effective automation can only be built on standardization. If each technology uses its own set of representations for trade events, then we'll simply recreate the existing disjointed infrastructure. To realize the full potential of these technologies, we need a common representation of trade events. That's where the ISDA common domain model comes in. ISDA's aim is to create a comprehensive standard digital blueprint for how derivatives are traded and managed right across the life cycle of a trade. The ISDA CDN will enhance consistency across firms and platforms, providing a bedrock of standards upon which new technologies can be applied. The derivatives market is on the cusp of a technology revolution. The ISDA CDN will help realize that potential.
Now, this is all through DLT, blockchain. I mean, tokenization is the crucial piece as well, considering the fact that you don't actually get efficient markets without the tokenization of derivatives on DLT. That's why we look at quadrillions of dollars flowing on chain. Everyone is constantly talking about how it's not going to affect the value. It's not going to do this. Guys, what do you think happens after all of that value is on chain? It has to be traded. It has to be bought, sold. That's where these networks become extremely valuable. But also over here, we have Ripple partner ISDA, new platform, common domain model is designed to support DLT technology. The industry is looking to DLT, and some market infrastructures are on the verge of replacing production systems with these technologies. The ISDA is currently leading the way in establishing a common domain model for derivatives. And here we also have the full breakdown on how it is designed to support DLT. And also over here, the industry is looking to DLT, and some market infrastructures are on the verge of replacing production systems with these technologies. This is going to allow them to manage digital assets, execute smart contracts, and connect to nodes in various distributed networks to share or retrieve data. As DLT and blockchain initiatives multiply across capital markets, the question of interoperability and standards will become crucial. ISDA is leading the way in establishing a common domain model for derivatives. And down here, some expect the role of intermediaries between asset owners, asset managers, and capital issuers to drastically transform or even disappear. Yes, this is happening. What is certain is that changes are coming and readiness is critical. And yes, this is the end game. This is the goal. Derivatives. This is also on par with $3 quadrillion worth of securities. Like, everything that we know of around us in value will be on chain. Guys, I'm so excited about this. And I think everyone should pay attention to this. Like, we look at Bitcoin as huge, right? But guys, when Larry Fink is telling you that it's going to be 100 times bigger than Bitcoin, he literally means it. Because just look at the value behind some of these markets. It is absolutely wild. And a lot of people are not even aware that some of these markets exist, but guess what? They will exist on chain in the form of tokenized assets that will trade 24/7, 365 on these networks. And yes, the XRP ledger and XRP will have a major role to play. I believe significant percentages will be achieved on the XRP ledger. 1% of $3 quadrillion, or even the derivatives market, is insane. So with that being said, I hope you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, to notifications on because more free content. You guys more than follow me on Twitter and join the free Discord down in the description below. And with that being said, guys, it's been Nick. Thanks for watching. Peace out.